everyone, welcome to Concepture Academy. Today we are diving into the income statement, a key financial report that tells whether a business made a profit or a loss over time. The income statement has another common name, the profit and loss statement, often shortened as P&L. Why? Because this report tells us whether the business made a profit or loss during a specific time period. So both these names mean the same thing and are used interchangeably in business and accounting. This report actually shows how much money came in and how much was spent and what's left over. So that's either profit or loss, just like checking if you earn more than you spent at the end of a particular period, say 1 month. Unlike a balance sheet that gives a snapshot on one specific day, the income statement tells the financial story over time. So it could be 1 month, 3 months, 1 year, whatever is the defined period for the business. Now let's move towards importance of income statement. Actually, this income statement isn't just for accountant, it's a powerful tool for anyone connected to the business. So first, it helps the owner see if their business is actually making a profit or not. So they can clearly see if they are earning more than they are spending. Secondly, it helps spot if any expenses are too high. For example, if the profit is low, they might notice electricity costs or salaries are eating up most of the money. And lastly, it's not only the owner who cares. Investors, bankers, and managers also use the income statement. Investors want to know if it's a smart investment. Banks also use it before giving loans, and the manager use it to plan for the future and manage spendings. Like other financial statements, income statements also have key parts. Here are three main parts. The first is revenue, that is actually total money earned from selling the products or services. The second one is expenses, that is the cost to run the business. There are various expenses like rent, salaries, and utilities. So what is left after expenses is the profit or a loss if expenses are higher. So that's the whole idea about key parts of the income statement. Let's understand it with help of a simple example of income statement. Let's look at a complete income statement. Our company XYZ Traders had sales of $500,000, and after subtracting the cost of goods sold, we get a gross profit of $300,000. Then we deduct operating expenses like salaries, rent, and utilities totaling $90,000, which give us an operating profit of $210,000. But the business also pay interest on a loan, which is $20,000, so the profit before tax becomes $190,000. From this, the company pays income tax at the rate of 30%, which is $57,000. So finally, after all expenses, the business earns a net profit of $133,000. This is the amount left for the owner or to be reinvested in the business. So it's important to understand the difference that gross profit tells us how much we earn after covering the cost of products, but net profit shows the real earning after paying all other business expenses. Let's have a quick comparison to have a clear understanding of differences between income statement and balance sheet. A quick comparison shows us that the income statement tells us what happened during a time period, while the balance sheet tells us the position at a one point in time. So they work together to give a complete financial picture. You can see that time focuses period. Here it is a point in time in balance sheet, while the purpose of income statement is to show the profit and loss, while in the case of balance sheet we want to know about assets, liabilities, and owner's equity. So main elements are revenue and expenses and profit in case of income statement, while in case of balance sheet it is assets, liabilities, and equity. Let's sum it up. The income statement shows how well a business performs financially, did it earn profit or face a loss. So it's that simple. So now let's see if you have understood it well. Now you can test what you have learned, and don't worry, it's quite easy and fun. Imagine you run a bakery and you earned $400,000 and you spent $150,000 on ingredients. So what is going to be your gross profit, and what would be operating expenses, and what will be the net profit? So solve it and drop your answer in the comment section, and I will pin the right answer. I hope by now you have a clear idea about the income statement, its structure and its use. So I hope today's session saved your time from going through bookish language. Keep learning and keep growing with Concepture Academy. Don't forget to subscribe on YouTube. Also follow us on Instagram and Facebook. And our next lecture will be on the cash flow statement. See you there.